Did you get a hold of Peter today? Is he going to be on this thing?
Kellogg?
Yeah.
No, I didn't try to. I feel like I'm really trying to figure all this out. And,
of course.
And I don't want to go, oh, I didn't know. I did get him today he was on the 6th tee. So how many seconds did I have?
You had about 18.
Yeah, I had about 18. And so basically what I told him was that the gist of this thing is that the analysts are really dumping on the company, and that, excuse me, I'm admitting people. The analysts are dumping on the company with the thesis that 3 big BEK plants, hardwood plants in the Southern Hemisphere are coming on stream. And it does total 4.5 or 5 million tons, which is about 7.5% of total hardwood and softwood capacity. It is a big number.
It's a big addition, right?
But that basically I said, I had told him, I talked to Jimmy, and Jimmy gave me a couple of really good insights, namely that there's a real shortage of bulk shipping capacity, and that and a lot of this BEK just isn't going to make it to their markets. The other thing I thought was extremely interesting was that when you add hardwood as a when you add hardwood as a raw material, Sven, it makes the product bigger. So when you have a shelf down at Safeway or whatever of toilet paper and paper rolls, it just, if it's made with a high hardwood content, it just takes up more inches. And the supermarkets and the other retailers like Walmart are very sensitive to that.
Let me ask you a question, Joe. Do you do any of the supermarket shopping for your family during the COVID here?
Yes, I do.
Yeah, so do I. So do you find a lot of toilet paper on the shelves in the supermarket? Because up here, there's very little toilet paper on the co-op food counter shelves, or even at CVS. They're short toilet paper. There's no doubt about it.
Well,
No,
believe it or not, in my 31 years of being married to Kim, for some reason, she's the purchaser of toilet paper, and she stuffs it down in the basement. Okay. I don't know why. I didn't even, when you said to me, do you ever buy toilet paper? I only buy toilet paper if there's a piece of paper on my desk that says go buy toilet paper. But it just kind of, there's a big supply of it down in a rack in the basement. And anyway, folks, we got a bunch of people here, and we're very lucky to have Sven Karlin of Hanover, New Hampshire, because he's far more expert than me on Mercer. And the point of Mercer is as follows. They just reported 148 million in EBITDA, a record quarter for them. And basically, I was quasi shocked to see RBC and others write reports that basically said, we're downgrading Mercer from the current price of 10.5 or 11 to 8, because we think that there's going to be we think that in the Southern Hemisphere, there are going to be 3 big new plants of hardwood pulp that's called BEK coming on stream in 21 and 22. And that's going to drop the price of BEK dramatically. And that's going to, in turn, drop the price of NBSK, which is Mercer's product. And instead of Mercer having $433 million in EBITDA in 21, we think in 22, it's going to be $280 million. And I completely agree with that for several reasons. But now I'm going to let Sven Karlin take over and talk about Mercer.
Okay, well, I'm certainly not an expert, but I have spent a lot of time working on this company. I have owned it several times over the last 30 years. I met Jimmy Lee in 1992 at Furman Cells. I was working in New York City and forming my own investment partnership. And Jimmy Lee was there visiting Roy Furman and Bernard Cells, and they were doing a deal to acquire this old dilapidated pulp mill called Rosenthal in Germany. the only pulp mill in Germany, the only NBSK pulp mill in Germany. They got a lot of paper manufacturers, but they had no NBSK pulp mill. And he also acquired with that 4 paper down and out, very poor, small, uneconomic paper plants. And it didn't make a lot of sense to me, but for some crazy reason, between 1992 and 1995, pulp prices went up the page, and this stock went from 5 to 25 in a straight line. And I said to myself, well, the next time I get a chance to look at this thing, I better look a little bit more carefully, because I missed that whole move. Subsequently, I have owned this thing several times, but I just bought another 20,000 shares. I own 160,000 shares myself, which for me is a big position. It replaces my Namtai position as my largest position in the portfolio. And primarily, the reason I like this thing is I really like the management. I think Jimmy Lee is a brilliant chemical engineer who really understands all aspects of the pulp and paper business, and has been demonstrating that over the last 30 years with annual capital spending programs that have been upgrading their plant year in and year out very effectively. He's always asked on every conference call why he doesn't take his cash and buy stock back. It looks so cheap. Did I miss everybody?
Yeah, hold on. I took care of that.
I've lost you, Joe.
Go ahead, Sven.
Okay, so where was I? Well, his capital expenditure program has been very impressive, and whenever he has a chance, or analysts think he should buy stock back or increase the dividend or pay a dividend, he always says this industry is extremely inefficient, and it's run by a lot of old players who have a lot of old plants that are deteriorating every day, and we are going to be the best, most efficient plants in the business. And that's NBSK, and now in the lumber business. They've done several very smart things. They bought a lumber business out of bankruptcy from Klausner, I think is the name, German Klausner, back in 2017, that, as you can see from the numbers this year, it's just been spewing cash. Obviously, we had a price spike with all other commodities in the first and second quarters in lumber in the United States, which is now completely reversed, and we've taken that spike out. But prices have held up very well in Germany and in Europe in general. And that acquisition was a brilliant acquisition to buy a company out of bankruptcy. And then more recently here in the last 6 months, they had a decision to make whether they wanted to build a lumber plant from scratch at Stendal in Germany. The advantage they have there is absolutely virgin forests, huge virgin forests in and around the Stendal plant that haven't been tapped since the mid 1930s. So their cost would be very, very low, and their volume would be infinite. So building that kind of a plant could be extremely profitable long term. The freeze-out plant, which they bought out of bankruptcy, I think now with some additions, is the largest lumber plant in the world. And if you add another plant at Stendal, they become a huge factor in that business. Driving all of their capital spending decisions has been the desire to be on the right side of the climate change environmental equation. They have spent the money, and if you've watched their accounting, they're the most conservative company with regard to the way they account for their business versus all the other players in this industry. That's a very solid, conservative, long-term approach, and I think it's going to be successful. I started following this thing. They were, in the early 2000s, they were lucky if they could produce 50 to 100 million of EBITDA. And now here we are, the RBC analyst who's talking about their EBITDA number being $433 million this year. I'll remind you, they did, I think, 80 million in the first quarter, 83 million in the second quarter, 148 million in the third quarter, and they're going to do 120 million according to his numbers to get to 433 million. What is normalized EBITDA for this company? It has historically moved up the page 50 million every 2 or 3 years. So in the last 5 years, the range has been 200 million in the down year in 2019 and 430 million this year. I think if you look at the makeup of that $433 million this year estimated, you will see that it was done with huge downtime in both the first and the second quarters, with a boiler blow up, at their Rosenthal plant, and with a problem with their Peace River plant, so that their capacity was far greater than what they were able to produce this year. So down the road, in a good year, a reasonable pricing year and a good production year, it seems to me that the inherent EBITDA of this company has moved up into the $300 to $500 million range, and it's soon to be increased to close to 600 million by this latest acquisition they made out of bankruptcy of this cross-laminated timber facility. They're buying a facility in Spokane, Washington, which is $150 million of new equipment. This is a technology that creates a product that is more environmentally friendly than cement constructed buildings. And therefore, the demand for this product in Europe is going through the roof. And it's just started to catch on in the United States. They bought this thing, their order book looks like it's going straight up the page. The question is, how quickly can they ramp? We don't know. But talking to the company would seem to indicate their capacity. Joe, you know these numbers better than I do, yeah. But maybe the potential to produce a couple $100 million of revenues at the potential for a 30 EBITDA margin, which would be another 60 million of EBITDA. So the question is, what is normalized EBITDA for this business? And what is somebody willing to pay for normalized EBITDA to acquire a green business that is on the right side of the climate change environmental equation? Some big company, Jimmy Lee's now, getting up near 70 years old. He owns a big piece of the stock, as you guys probably all know. Peter Kellogg owns, I don't know, was it 25%, Joe?
30.
About 25, 30? 30% of 66 million shares. So that's 20 million shares he owns. His cost on this thing, as he goes back forever on this, my guess is his all-in cost is somewhere between 8 and 12. That's the best I can give you. I don't know what it is.
Hey, Sven, I heard there was a brilliant security analyst and broker in New York City who got him into that 30% position. Do you know who that might have been?
That might have been me. Anyway, I sold him this thing a long time ago. And if any of you guys know Peter Kellogg, he's a brilliant buyer. And only one time that I've observed has he been a brilliant seller. And that was when he sold his business, Spear Leeds, to Goldman Sachs. That was a specialist business, in the fall of 2000 for $6.5 billion of Goldman Sachs stock, which was not worth more than $100 million 5 years later as we went to electronic trading. So that was a brilliant sale by Peter, not such a brilliant purchase by Goldman Sachs. Anyway, I've known Peter for a long time. He's a close personal friend. We've done a lot of trading together, and we've kind of grown up with this company. But I have seldom seen this thing cheaper than it is right now. And the way I look at it is, I think if EBITDA range moves up to $400 to $600 million in good times and bad times, and that means pricing on lumber and NBSK being, within their normal range, I think that somebody's going to be willing to pay the midpoint of that, or let's say 500 million, at least a 5 multiple, and maybe a 6 multiple. Joe's got higher numbers than that, but if you pay a 6 multiple on 500 million of EBITDA, you're paying $3 billion. Let's call it less at that time, maybe 900 million of debt. divided by 66 million shares, you're talking about a shot at $25 to $30 on this stock. And you get paid a 2.4% yield, which I think is very safe while you wait. To me, in a market that's very expensive and everybody loves and everybody's in, that's a great place to hang out. Instead of cash at a 0.5%, if I can own Mercer at a 2.4% yield with a potential big payoff down the road, I like it. And then one last point I would make is these guys, if you've listened to any of the conference calls, they don't gild the lily. They're not good salesmen. They go to these conferences and you fall asleep listening to their presentations. Jimmy Lee's a chemical engineer, and David Gandossi and David Urey are not that different in terms of their personalities. Sure. I've watched them over 15 years try to do refinancing on their bond portfolio with Wall Street, and it seems to me they get their pants taken off every time. So there's no gilding of the lily in people's expectations on this company. What they need is a really good IR guy. They spend too much time on the phone with all of us answering our questions, and I think it's a waste. They need a really good IR guy to tell the story so that we can interact with that person, and I'm going to try to find that person for them. If any of you have any suggestions, Joe Pratt and I would love to know who that person is, because I think this stock is going out. It's going to be sold by Peter Kellogg and Jimmy sometime in the next 5 years for closer to $30 than $10. And I get paid 2.4% while I wait. So that's
can
the
I
basic.
add something right there on that?
Sure.
This is an anecdote of characterized by optimistic speculation. And that is, I call my friend Eric Anderson, who's a very, with Hartford Financial, the money management firm, very knowledgeable on the pulp and paper industry, and a very laconic New Englander. And I said, hey, Eric, when the big deals have been done in the pulp and paper industry, what was the EBITDA buyout multiple? And he said 11. Now, that's very lofty. You've used 5 or 6 or 7. So anyway, I just want to throw that in the mix, because 11 equals $50 a share off 400 million in EBITDA.
Yeah, and if you do a replacement cost analysis on this company, you get $50 to $70 a share to start from scratch and build what they have right now. And they've got modern plant. They keep upgrading, updating, upgrading. I've been to see the Stendal plant in Germany. I've been to see the Rosenthal plant. I've been to see the Celgar plant out in east of Vancouver. So I've seen these plants. I'll give you one more little tidbit. When they took over Celgar in Canada, they had an old workforce. These guys were all in their 50s and 60s working at this NBSK mill, which had been their life's work, but they were much more interested in hunting and fishing than they were producing NBSK pulp at this plant. And there was constant downtime problems. And they went in there, took over this thing, and over a 5-year period, they completely changed the management and the workforce at Celgar. It's a young, motivated workforce now. Average age, in the 40s, as opposed to in the late 50s, 60s. And these guys all have an economic interest in that pulp mill producing great pulp at close to capacity. So that's just an indication of the way these guys manage. They're excellent managers. They're not great financiers, and they're not great salesmen, and hence the discount this stock sells at. It's got a liquidity problem in that there are only 66 million shares at $10. So for big institutions, it's hard to get in, hard to get out. And they also have a discount because of a lot of leverage on the balance sheet. Now, the leverage on the balance sheet is offset by, the net debt is around 900 plus million, but they've got, I think, liquidity of over $600 million. So they're in good shape, and they have no big debt maturities coming up. And a very aggressive capital spending program as they continue to examine whether the next big capital spending program will be the development of this lumber mill at Stendal, where they have great raw materials to draw on. It's just how can we stomach a $200 million investment in a plant with our leverage balance sheet and with the cost of a lot of the equipment to build that plant going up because of scarcity. So they're backing off that and saying, hey, there'll be a good time, but it's not right now. We like this CLT acquisition a lot better. So that's what I know. Anybody have any questions? I'll try to do the best I can.
Okay, let's hear it with questions if you have any. Okay, just keep in mind this dividend of 26 cents a year is roughly $25 million in dollars, and with EBITDA of 400 million, it's not as if they're paying out a high percentage of EBITDA. Okay, I just want to make that statement. Also, I'll throw in some technical stuff that I know nothing about, but my cousin Frank Castle has a couple of, he's a fund manager basically in Europe. He, or for European capital, and he has some very smart technical people, and they called him the other day and they said, Frank, these are the greatest hammers I've ever seen in the past couple of days. Well, what these hammers do is they tell you that when the stock's on its ass and it tries to go down, it doesn't go. I think it doesn't go down. That's his point. He just thinks, he thinks this thing looks like it's bottomed here. Okay, I'm going to stop there. Sven, let me do something here to save time for you. And that is, I want to talk about Northwest for a minute. I'm expecting their paper in about 2 weeks, maybe at the Snow Conference. But I've come down to one concept that describes why I'm interested in this thing. And that is, we all know about glioblastoma multiforme, commonly known as GBM. And, you know, Ted Kennedy, Joe Biden, my best friend, Judge Weeks from New Hampshire, Arnold Milton from Houston, a friend of ours who actually found Northwest for us. And I've done a survey among some pretty smart investment managers who look at GBM and what drugs can address it. And basically, they have said that the 3 lead investigators of this clinical trial of Northwest on DCVax-L are Dr. Quinones Hinojosa of Mayo, Jacksonville, Florida, Dr. Kiyomor Ashkan of King's College, London, and Linda Liao of UCLA. And they say those 3 people are the best researchers in the whole world on moving forward treatments on GBM. There may be 2 or 3 or 4 other people. I hear there's a good guy in Italy with the name of Weller, which is very uncharacteristically non-Italian. But he's a name I've got to research. But that's what these people, they wrote the June 1st, 18 paper on the blinded data. They're the main authors, I believe, on this paper that's supposed to come out at any moment. And there is not a single piece of Wall Street research on this company. And so I'm expecting the paper. The paper is the alpha and the omega of this situation. We live or die by how strong the data is in this paper. If it's very strong, I can't see how the market cap wouldn't be less than $10 billion, because what it will mean is that the standard of care has been what it is since 2005. And it consists of, if you walk in and say, you know, hey, doc, I think I have GBM, and he confirms it, he says, okay, within a week, you're in the operating room to get what's called a surgical resection, which means he's going to take out as much of the tumor as he can. And then he's going to write a script for radiation and chemotherapy, which is a drug called temozolomide, and that's it. And what Linda Liao is a quiet, lovely lady who just strikes me as being fiercely ambitious, and she wants to go down the history books of medicine. And she's been giving a lot of conference presentations that tell me she wants to see the clinical world and the FDA world clamor after they read this paper to change the standard of care from what it is to adding DCVax-L. And that's really all I'm going to say about Northwest. We've had a very, very good talk by Sven. And if there are any questions about Northwest, please ask them now.
Joe, can I make one more addendum to my Mercer comments?
Yes.
I forgot one very key point, and that is the argument by the RBC analysts that we're heading into a cyclical decline here, and that the price of BEK or hardwood pulp going down will be followed by the price of softwood pulp going down. I'd like to say what Jimmy Lee says to me every time I talk to him. Sven, one of these days, the spread between those two prices is going to widen dramatically. Jimmy, why is that? That's because there's no new NBSK capacity of size being added here. It's very expensive to build. And what's out there is not being maintained, and it's environmentally deteriorating, such that they're in violation. A lot of these old plants in Canada and the United States, but mostly in Canada, are in violation of local environmental ordinances. So the question is, well, why don't they get shut down? They don't get shut down the same way nothing else gets shut down that's in violation. It just gets, the can gets pushed down the road. He said, but what's going to happen here is they're going to have breakages in these plants. And when they get breakages, they have to get permits to be able to fix those breakages. And there's only two ways that's going to happen. One is they're going to have to spend a hell of a lot of money, which is going to make the plant even more inefficient than it is now, or they're going to shut it down. And if they shut it down and the capacity starts to shrink, remember, demand for NBSK is a function of the growth of the middle class in China and India. That's where toilet paper is bought in gobs on the margin. And it seems to me that's not going to change. And therefore, I think the analysis that the RBC analyst says of these two prices going down in sync may turn out to be wrong. And if it does, the difference of $20 or $30 or $40 a ton spread, greater spread on NBSK is extremely profitable to Mercer being the second largest NBSK producer in the world. Okay, enough of that.
Okay, I'm going to wrap it up here. And Sven, I just want to tell you, I really appreciate you being on here. Very outstanding, succinct, articulate presentation for everybody. Thank you, everybody, for attending. Talk to you later.
Thank you.